Hello everyone, my name is Samantha Casas and my partner Ricardo Wilson and I will be talking to you about three general types of business entities. There is more out there, but we will focus on the ones you have most likely heard of, which are sole proprietorships, partnerships, and corporations. After we go over some of the basics, we will work through a couple of problems that will help you identify which entity is best for a specific business type. As you will see, there are a lot of factors that play into it, and there is no correct answer, but there are entities that are better than others for your business type. So the first entity that we're going to discuss is a sole proprietorship. Most of you are probably operating as a sole proprietorship right now. Basically, if you're engaging in business activities with no partner, then you have a sole proprietorship. The status is automatic. It is not necessary to file anything with the Secretary of State to form a sole proprietorship. However, if you use a business name other than your own name, you are required to file an assumed name certificate, also called a DBA, which some of you may recognize, with your local county clerk. As you can see, I listed some examples of common businesses that operate as a sole proprietorship. Now, for example, you may know someone who does makeup for weddings or special events, and they have a Facebook page and an Instagram page, but that's all they have. Like there's no office or business cards or uniforms, etc. They are operating as a sole proprietorship. Now, if they advertise the name of their business as something other than their name, like Makeup Magic, then they would have to file a DBA versus if their Facebook page and Instagram page just had their name and then listed the services that they offered. So a sole proprietorship is the most simplest and easiest, and again, because it's automatic and there is no formal filing requirement. But there is a cost. You will be vulnerable to all liabilities and debt of your sole proprietorship. But again, you can protect yourself with things like waivers and insurance. You will see individual federal income taxation is both a pro and a con on the slides. And that's because for tax purposes, a sole proprietorship is a pass-through entity. Business income passes through to the business owner, who then reports it on their personal income tax return. So the pro is that it reduces the paperwork required for annual tax filing, but the passing through means you claim all the profits as well as all the losses, which is why it can also be a con. There are other taxes you may still be responsible for, such as federal income tax, state income tax if this applies in your home state, but Texas does not have one, self-employment tax, and sales tax. If applicable, it does depend on your business type. Each type of tax has its own requirements for reporting and payment. We always recommend business owners have a tax advisor to help them determine what taxes they need to pay. A common misconception is that a partnership is just two people, but that's not true. It could be multiple people. The most basic form of partnership is the general partnership. Like a sole proprietorship, being in a general partnership makes each person in the partnership vulnerable to liabilities and debt. But again, each person can protect themselves with insurance and waivers, and by even forming certain types of partnerships, which we will get into a little later. A general partnership is similar to sole proprietorship in that there is no requirement to formally file anything with anyone to have a general partnership. It is possible that you are in a general partnership right now and you don't even realize it. So for your protection, as soon as you get another person involved in your business or you are involved in someone else's, put something in writing like as soon as possible and make it very clear where everyone stands. So here is a list of some other partnership types. I mentioned the general partnership, then you have the limited partnership and the limited liability partnership. The main difference between a general partnership and the others is that the LP and the LLP do actually require some sort of formal filing with the state. People usually form LPs for short-term projects or ventures, while LLPs are usually formed for professional service businesses like attorneys and medical professionals. And you can see why that is. Let's say you have this business idea that is specific to a certain event like the rodeo, and what you really need is money, but you want to keep all the power and say so. So you would form an LP. In an LLP, an attorney, for example, would not want to be responsible for their partner's legal malpractice, so they would form an LLP where each partner is responsible for their own liabilities. So now I'm going to hand it over to my partner Ricardo, and he's going to go over some of the pros and cons of a partnership.
Thanks, Samantha. All right, so pros and cons of a partnership. There are some actual tax benefits of having a partnership. Unlike a corporation that gets taxed at the entity level, which we'll discuss here in a second, partnerships have what's called pass-through taxation. That being, the money that the partnership makes is taxed on the individual tax returns of each partner. So the partners pay taxes proportionally according to their ownership percentage. Therefore, they avoid paying one tax at the business level and then another tax at the individual level. There's also some additional flexibility and options that you get with a partnership. Partnerships aren't a one-size-fits-all. Depending on your situation, you can choose the type of partnerships that's most beneficial to your business. Different types of partnerships offer different types of liability protections. With that being said, some of the disadvantages of a partnerships are the liability issues. Oftentimes, your personal assets can be liable in the event that the business gets sued. Additionally, management is often decentralized, and it can be difficult at times to gain unanimous consent for certain decisions. But as we just mentioned, these can be avoided by becoming a specific type of partnership like an LP or an LLP. You need to consider how you want to be protected within your business when deciding whether or not a partnership is for you. Corporations. A corporation is a type of legal entity that is separate and distinct from its owners. An important element of a corporation is its built-in limited liability. That is, the owners or shareholders of the corporation are not liable for any actions of the corporation. Corporations also enjoy what's called centralized management. That is, the decisions of the corporation are made by elected representatives, not the shareholders generally. For instance, in a partnership, each partner gets a say in the decision-making process typically. For a corporation, shareholders vote on who they think should make the decisions. Partnerships are more akin to democracy. Each partner gets a vote, where corporations are more akin to a republic, where representatives make the decisions. At the bottom here are some examples of corporations. Pros and cons of the corporation. Benefits of the corporation include the limited liability that we just mentioned, and because it is a separate entity, the corporation can last forever. Some of the drawbacks, though, are its formalities. It can be expensive and burdensome to file all of the registration and other filing requirements that corporations need. Another drawback is that management owe a duty to look out for the best interests of the shareholders. This duty can create expensive litigation for the corporation. It's also worth noting the different tax structures that you can choose from within a corporation. There's a C Corp taxation, which is basically when the corporate entity is taxed, and then the corporation gives out dividends and the owners are taxed on their dividends. That's known as double taxation. There's also an S Corp election, which is pass-through taxation, very similar to partnership taxation. In 2017, there was a creation of a new legal classification called a Texas Public Benefit Corporation. This entity or classification was created by the state to allow managers to take into account public benefit when making business decisions. For a typical corporation or for-profit business, the managers owe a duty to the shareholders, and usually maximizing profits is prioritized. However, with a Texas benefit corporation, managers can now take into account other considerations besides maximizing profits. We have some examples below to kind of illustrate how this works out. So now we're going to run through some problems and see which legal entity would be the best for each situation. Problem 1, Dave. Dave originally created the idea to build custom computers, but did not have the space to build the computers, so he asked his friend Joe to lend him his space. After seeing Dave build the computers, Joe became interested and started to help. The past couple months, Joe and Dave have been working in Joe's garage using all of Joe's tools and machinery, building custom computers for people who order online through a website Dave created. Dave is noticing businesses growing and wants to make the next step in the business. What entity should Dave consider forming? Because there are two individuals, Dave and Joe, a sole proprietorship isn't an option. And if they don't form a specific entity, they'll technically be a general partnership. A general partnership isn't ideal because it doesn't offer any liability protection. In this case scenario, an LLC will be the most advantageous. We'll talk about LLCs later. Problem 2, Hannah. Hannah went to cosmetology school and acquired her license to cut hair. She currently rents a space at a storefront in a shopping center where there are 3 other hairstylists and a barber. She's been cutting hair on the spot for a year now. What entity should Hannah consider forming? Because it's just Hannah, and because the likelihood of her business being sued is so low, a sole proprietorship may be the best option in this scenario. Alright, so one more. Problem 3. 4 friends pitch in to renovate a warehouse one of the friends bought from a foreclosure sale a year ago. They want to renovate the space into a bar where people can also enjoy arcade games and bowling. The friends want to open a second location on the other side of town in the future if this location is successful. What entity should they form? In this scenario, an LLC would also be the best option. They get the limited liability protection while at the same time having the ability to choose partnership taxation. With all of these options, it's important to choose the type of entity that is best for the nature of your business. Questions you may want to keep in mind include, do I want to own the business alone, or do I want to bring in someone else? What kind of liability will my business generate? What federal income tax treatment is most desirable for my business? What person or group will make the important decisions in my business? The form of entity you choose can directly impact your business's success.
Lastly, we wanted to share with you 2 really great online resources. Whenever you're ready to take a deeper dive into forming your business entity, first go to these websites. They will answer most, if not all, of your questions about who you file your paperwork with, how you file the paperwork, associated costs, how often you file, and many other frequently asked questions. We want to thank you for allowing us again to present to you guys. Although we are not there to congratulate you in person, we are very happy that you have made it to the end of the program, and we really look forward to working with some of you in the future. Good luck.